What's up, everyone? All right, well, here we are, middle of the week. It's Wednesday, and guess what? Today we had actually two surprise short squeezes. This was really impressive and kind of unexpected because Monday and Tuesday, green days, but it was a little slow. If you saw my recap on Monday, I was up a little over 10,000. Recap yesterday, about 2,000. But trading these lower price stocks, churning a lot of fees and commissions, churning a lot of shares. Getting in with 10,000, getting out with 10,000, doing that, 30, 40 times. Next thing you know, you're trading hundreds of thousands of shares and fees and commissions are going to be higher. So today when I sat down, I was like, you know what? After my trading yesterday, I think I should start by going a little slower. And you know what? I didn't even break the ice with my first trade until, gosh, I don't know if it was 8 or 8:30, but let's go ahead and take a look. So I'm currently sitting up $18,767.27 on the day in the green here. I'll remind everyone tuning in, perhaps for the first time, my results are not typical. I've been doing this for a long time, so I don't want you to assume they're going to watch this recap or watch some of my episodes here, and you're going to start knocking out $18,000, $20,000 days. It takes a long time to be able to scale up to this level, but here's what I'll tell you. The right place to start is with what? Small share size. So what I want you to do is focus on getting 10, 15 cents a day per share of profit, 15 cents. So you might say, Russ, well, 15 cents, if I'm trading with 100 shares, that's a $15 daily goal. And I would say there's nothing wrong with that. If you could focus on consistently making $15 a day, and you can do that for 6 weeks, 8 weeks, a couple months, few months, 3 months, 4 months, you're proving with a track record that you know what you're doing. Now, what you do is you flip from doing that in the simulator to trading with real money. So this is where you go from 100 shares, you do this in the sim, then you flip the switch, trade with real money, and if you can continue averaging $10, $15 a day of profit with 100 shares, real money, then you start going from 100 to 200. You go 200 shares, you're starting to get up towards $30 a day of profit. You go to 400 shares, you're getting towards 60. You go to 800 shares, you're getting toward 120. Now, again, I know that this isn't huge money, but this is laying the foundation because this is where it starts. Now, I just did an interview last week, or maybe it was, I think it was last week, with Danny. He's a member at Warrior Trading who's earned his profitability badge, and he's getting ready to upgrade to the next badge. And so we did an interview where we sat down and talked about his strategy, and he shared and reminded me that for his first 6 months, he was just focusing on making $8, $10 a day. That was it. It wasn't big money, but it was proof of concept. And so today, when I first sat down, I thought to myself, all right, I think I should stay away from these cheaper stocks because, to be honest, it's harder to capture 15-cent winners on these cheaper stocks. And I know the broker that I trade with charges fees and commissions, so I've just got to be thinking about that. So guess what my first trade was? First trade of the day was on BTCT. You can see my P&L here. I'm up $9,400 on Fbrx, and BTCT is another $9,000. So those two trades were my biggest winners, and then these two basically cancel each other out. Now, XCUR, I left some money on the table because this ended up making this move up to 10. I traded it in here, got stopped out. It then came back up for a second attempt, went through 10 to 11 to 12 to 13 to 14, almost to $15 a share. Now it's coming back down. So, I missed the second leg of it. Probably could have gotten myself back to green and maybe even over 20,000 on the day. But nonetheless, it is a green day. So first trade of the day was on BTCT. So here was my approach. I sat down this morning and I still have the price of Bitcoin up here on my side chart over in the corner. And, I've just had it up here the last, I guess since last week. My $100,000 day last week was on BTCT. In fact, it's probably the stock I've made almost the most on this year. So that was on this day here, back here, last Wednesday when Bitcoin, the price of Bitcoin made an all-time new high. But it ended up selling off. And over the next few days, it sold off a little bit more, kind of rallied back up, pulled back, rallied up, pulled back. And then just yesterday at about 2 p.m, it squeezed through to a new all-time high. Now, I missed that. But this morning, when I sat down, we were hanging out right under this level. And so as Bitcoin made a new high right here, I jumped on BTCT, knowing that this was a sympathy stock for Bitcoin last week. So, in the past, I've done this where I'm focusing on this chart here, but I'm not trading what's on the chart. I'm trading something else. It's a type of derivative. So I did this in, I don't know, it was 2012 through 2014, sort of earlier years of trading, we were getting these FOMC meeting minutes, and we were dealing with quantitative easing and sort of all this turmoil around the economy. And when the S&P 500 would flush, I would buy UVXY. UVXY would spike. It's the VIX. And when the S&P would pop, I would buy SVXY, which is the short of UVXY or the VIX. So I was trading SVXY and UVXY as the vehicle to trade the S&P. Why wouldn't I just trade the S&P? Well, those two vehicles are leveraged, so their moves are always going to be amplified versus whatever the underlying asset does. And that's going to be the underlying asset is actually the VIX, but the VIX trades very closely inversely to the S&P. So that was why I was doing that. Now, in this case, Bitcoin is the underlying asset. Now, could I have bought Bitcoin for the break of 94,000 and a move up higher? Sure, but it only went from 94,000 to 95,000. That's like 1%. It's not, I mean, it's not nothing, but it's not a huge move. On the other hand, how much did BTCT go up? Almost 50%. Why? It's a small cap stock that touches cryptocurrency. And so I was able to trade it almost as like a proxy for cryptocurrency, sort of a derivative. So as Bitcoin starts squeezing up, I've got my chart up for BTCT. And BTCT was already up pretty nicely, as you could see right here. It already popped up, it pulled back, and I got in right here as it broke through this level. Boom, 10,000 bucks right in that candle, in those two candles. So I tried to get a little bit more. I actually was up a little over 10,000 on it. Actually, I was probably up unrealized even more than that, but I didn't take it all off the table at sort of the optimal spot. I thought this was going to keep going. So the first spike was right here. It broke through 1940 and goes up to 20, does a micro pullback here, goes up to 21, micro pullback up to 2140, bigger red candle, rallies back up, and then comes back down. So I had full size, basically added full size as we broke through 21 here and was looking for a move up this way. So when it kind of knifed back down, I had to get out of the shares I had just added that high, but some of the shares I had added down here in these first pullbacks, I was in profit. So it took profit in this red candle, then it comes back up and I added back and it goes up a little higher and then rejected again, ended up giving back 1,000 off the top. At the open, it kind of curled up for one more attempt, but by that time, I had switched gears and was focused on something else. So BTCT, 2.1 million share float, that was the first stock I traded today, and that first trade was around 8:15. So was sitting here for over an hour before I ended up finally breaking the ice with my first trade. Okay, so then second trade of the day, got the trade on BTCT, and then the next trade, let's see, was on SPAI. So SPAI pops up on my scanners, and initially I was like, guys, I don't like it. The reason why is it popped up the other day and it rejected. So if we look at the chart here, it popped up, it rejected, rallied back up a little bit. So when it first popped up right here, I was like, nope, don't trust it. But it pulled back, it came back up again, it pulled back. And when it came back up again, I decided I'd give it a shot. So I got in here basically for the break through this flat top. It goes up like 10 cents. I made 400 bucks on it. And then it got really choppy and heavy. So it did end up breaking again and making a bigger move, but it retraced that and didn't hold up. So a small winner on that. And then Fbrx hits the scanners. Now, as Fbrx is moving its way up the scanners, it's on the low float top gainer scanner, moving its way up. This is a scan that searches for stocks with floats of under 5 million shares. So these are can be some of the most volatile stocks in the market. So I see it moving up that scan there, and I'm thinking, all right, this is interesting, but today it's been a little choppy. Can I really trust it? And I wasn't so sure. We had seen a couple rejections also. ZVSA rejected earlier. That popped and dropped. There was another one as well, although I can't think of it off the top of my head. Oh, CTTA or KTTA. This one popped and dropped as well earlier. So when Fbrx first hit the scanner, I was like, let's see if it can hold. I'm not so sure. I saw that it had news of a private placement. Now, private placements are interesting and should be differentiated from maybe a direct offering on the open market. A direct offering on the open market sells shares straight onto the market and creates a lot of selling pressure. A private placement instead gives shares basically as a sort of off-market transaction directly to a private institution, and the private institution writes the company a check. So the institution is issued shares, which they can go ahead and sell, but they're probably, I mean, you never know. I guess they could go ahead and sell it as soon as they want, depending on the terms of the private placement, which you'd have to kind of look into and get more detail on. But it's a little different than your typical form of dilution because it tells you, number one, that an actual institution was willing to write them a check for $53 million. That's a lot of money. We now also know that we don't really have to worry about another secondary offering for a little while because they just raised a lot of money. When a company does a direct offering right on the market, they're selling shares mostly to retail traders who historically are not the savviest when it comes to knowing what to invest in. So a company that just dumps shares onto the market is basically just selling them to retail traders who are going to be bag holders and don't know better, unfortunately. So when instead these shares are sold to an institution that has, their due diligence team and this and that, they know what they're doing, and they still write the check for $53 million. That's sort of a different standard, and that's a higher vote of confidence. So anyway, so that's the headline. Some people think it's bearish because they're diluting the value to raise money, and it's true that the institution that they sell to could decide to sell these shares and dump them on the market, and they probably will at some point, but in the meantime, it pops up here to 850 on the news. It pulls back. It goes back up to 8, pulls back, pops back up here. I got in my first trade right in this area, and I made about $400. It pops up to 8, it goes up to 850, and then it drops back down. I was like, all right, well, the reason I got in there was because I felt like this was sort of an ABCD pattern, but then it rejected, comes back down. And then it comes back up, and I was like, well, I'll get back in. It breaks through this level of 850. It goes straight to 950. It pulls back, and then it goes from 950, right? On this micro pullback, I'm adding. It goes up to 10. Micro pullback there, I'm adding. It goes up to 1050. It goes up to 11. Boom. Just like that, you've got $3 a share. Holy smokes. It pulls back. At the open, it rips up, dips down. So right there, I peak at about 18,000 on the day. It then ends up halting down. I buy into the halt down, thinking it's going to rip back up. A little bit of a risky move, but I did smaller size. It does open higher at about 10. I take the profit, but it sells off. Comes back up again. I'm watching it, rejects hard. I'm like, oh, I don't like that. Comes back up again. I'm about to press the buy button, rejects a second time. Whoa, that was close. I almost just lost $1 a share. Comes back up a third time. Fool me once, shame on you. Fool me 2 times, shame on me. Fool me 3 times, I'm going to go ahead and buy. So I got in right here. And I was like, this is a risky move, but I'm going to do it anyways. So I buy 2,000 shares. Not a big position for me. I'm already up 18,000 on the day or something like that. So, or 16,000 on the day. Anyway, so I get in here and it squeezed into a halt up, and I take off some profit right away into the halt up. It opens, goes into a second halt, take more profit off the table. It opens and it pops up, it dips down. I bought the dip, it rips up, I take the profit, it dips back down, it pops back up, I add back, and then it's halted down. I'm holding 2,000 shares now into the halt down 2,000 unrealized. I'm in at like 1350, the halt down is 1250. So I'm like, oh boy. It resumes, comes back up to 1350. I get out more or less break even. It dips down to 12, then rips up to 1360, and I add back here, it halts up, but I only do small size. It opens higher at 16, halts down, and I was like, you know what? I feel like I'm kind of playing with fire right now because these halts are making, I'm not managing my risk super well. So at that point I said, you know what? I think maybe the writing is on the wall here for me to step back. So as it started to rally back up and halted again, this candle opens, drops to 15, rips to 17. I was like, that's a 2-point range in 10 seconds. I just can't do it. I can't take the risk up here. It goes from 17 to 19, back to 17, and that was our high of day. So, actually it looks like there was one more second attempt, which ended up being kind of a jackknife. So anyways, could I have done better on it? Oh, sure. Probably could have, but I had a pretty decent day today, all things considered. The move was a little lighter on volume at first. The news, not maybe what you would typically expect. And then the halts and sort of just how fast it was halted down nearly and then halted up made it a little trickier at the open. So in total, I think I peaked at maybe just over 20,000 on the day and gave back maybe 1,300 or so off the top. So, green is good. I'm grateful for that, but I don't need to overstay my welcome, right? I'm happy to lock up green days and keep building this kind of track record here and put together what will hopefully be a solid month. So this is where I'm at right now. I had the $100,000 day a week ago. So then the last 4 days, I had a red day on Thursday, 11,000 red, green on Friday, green on Monday, yesterday, negligible as it turns out. But then today, another nicer green day. So looking at the calendar here for the month of November, we've got, let's see, 2 days left this week. And then, so 1, 2, and then Monday, Tuesday, Wednesday. So that's 5 days. Thursday, markets close. Friday is Black Friday. Will be a lighter volume day. I'll be here, but it'll be a lighter volume day. So anyways, we've got 5, 6 days left in the month. I'm sitting at 219,000. Oh, now that's tough. I set a goal of 400,000. So, let's not forget, this was 219 before today. So I'll be at about 240 after today. So I'm still $160,000 shy of that goal. But when you see days like this, or days like this, or like this, you realize it doesn't take many days to really put a big dent in the monthly goal. And you know what? If the market gives me those opportunities, I'll step up to the plate and it'll happen. And if it doesn't, there's really nothing I can do about it. So a goal is kind of just, it's optimistic. You have to be an eternal optimist to be a trader because it's as difficult as it is. But it's an optimistic goal, and whether or not it happens, for the most part, is out of my hands. If the market gives me good opportunities, I can take the risk and I can step up to the plate, and I will. But if the market doesn't give me those opportunities, I can't force it. There's nothing I can do. So hopefully we'll continue to see some good moves. And I think after this 171% surprise squeeze on Fbrx, and then the additional 140% move or whatever it was on XCUR, that's good to see. I definitely like that. So hopefully that has us positioned well going into Thursday and Friday. Hey guys, if you enjoyed this recap, I hope you hit the thumbs up. I hope you're subscribed to the channel. And I'll remind you, if you want to do a 2-week trial, there's still time. I'll put the link top of the comments. I'll pin to the description. So check that out. Sorry, trading is risky. My results aren't typical. So please manage your risk, take it slow. And I'll see you guys back here first thing tomorrow morning.